Good morning. It's Friday, July 27th, about 6 a.m. Central Time. Looking at the precious metals overnight, they're slightly firmer. This comes after yesterday's bloodbath across the board in the metals markets. So looking at the overnight session here, we got silver unchanged, 24.37. Gold, we're now trading the December contract as the front month, up about $6, 19.91. Copper up 2 cents, 3.89. Platinum unchanged at 9.45. So looking at yesterday's action, kind of what happened, it was a three-sided attack on the precious metals markets. So we saw the ECB, they came out, they raised rates. However, Christine Lagarde was quite dovish when you listen to the press conference. They cited that the weakness really in the manufacturing sector, different areas. There's a lot of different pockets that are having some problems over there. So what we saw was the euro currency sold off significantly against the US dollar. The dollar was up about 75 basis points. The euro currency was down over 1%. And it really, that was kind of the catalyst to get things going. Remember the inverse relationship, 57.6% euro currency versus the dollar. So that's where your weigh-in goes. The dollar extends to a fresh 2-week high. Now looking at the next thing that came out at 7:30 at GDP, if you're a precious metals bull, like a long-term one, you need GDP to contract, and you need that to contract in order for the Fed to pivot from neutral to dovish. The Fed is still hawkish. We got to get them to neutral first. And that number is not going to do it whatsoever. 2.4% versus an expectation of 1.8%. The argument that people will make on why this GDP number was so strong was government spending. I agree with it, but I don't want to get into those kind of details. The numbers are the numbers. We got to move on. The claims number, that's the other one. 221,000 versus 234 expected. Remember, Jerome Powell said that the other issue that they're going to monitor is the labor market. The labor market's strong. Less people are filing unemployment claims. Nothing you could do. So the catalyst for next week on the precious metals is going to be that Friday jobs report. You need to see that come down. I have not looked at the expectations yet on it, so we'll be looking at those in next week. But other than that, the sell-off seems to have kind of leveled off in the market after yesterday. So, and we don't really have anything on the board. The Bank of Japan came out. They said that they're going to let the yield curve control fluctuate a bit more. So we do have a little bit of volatility in the end. It did spark a little bit of volatility in the precious metals. I don't entirely trust the bounce that we have in this overnight session. So we're going to want to look at, if you're adding to your position, you're going to want to look a little bit farther down, perhaps into the 1950s on the gold market. And then on silver, trail those stops if you have those bit of legacy positions we put on when it was $22, $23. Other than that, kind of be nimble on if you're going to add to the contract. I think that copper is still probably one of your best plays. I think that China, operating independently from like the dollar, the euro currency, and things like that, will come out and they will continue to try and provide some stimulus to their economy. So I think that there's an inherent floor on the copper market. You got any questions? Give me a call, 312-858-7303. Bill Baruch will be in New York at on the floor of the exchange or in CNBC headquarters doing the halftime show. So be sure to check that out. That's 11 a.m. Central Time. Got any questions? Again, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.